Hey guys, I hope you're doing well because today we're going to be analyzing the great Adobe systems. I've been noticing that these 10-minute analysis videos that I've been putting out have been getting a lot of support on my channel, so I'm going to be making them a lot more often going forward in the future. I apologize for the lack of videos recently because I've been sitting my university exams. However, they're almost done, so I will be back to posting 2 to 3 times a week very soon. But for now, let's talk Adobe. And as usual, we're going to start off with a brief overview of what the company is, followed by the 4 main areas that we look at for when analyzing a company, which is the economic moat, the ROIC, the debt, and then we look at the 4 key growth numbers, which are sales, earnings per share, equity, and free cash flow. And finally, we're going to look at the value matrix to see what kind of returns we can expect when buying at the current price, as well as if we wait a little bit for a pullback and buy it at a discount. Just before we get started, I need to say that I'm not a financial advisor and I'm certainly not your financial advisor, so everything here is just for entertainment and educational purposes only. If you're going to be doing investing for yourself, make sure you do your own research and consult a financial advisor. Also, I just want to mention that the channel has been growing really well. We flew past 200 subscribers before I even had a chance to mention it. So if you haven't already, make sure you subscribe and join the team and become a part of this community. And I know we're a very small fish community at the moment. However, the benefit of that is if you need any specific help with your personal investments or specific companies that you're looking into, just send me an email and I'm more than happy to give you some one-on-one support to help you through some of the investments or using these spreadsheets or something along those lines. So Adobe, now I'm sure you know the gist of what their business is about, but essentially they're in the business of multimedia and creative software products, which can be broken down into their 3 main business segments, which are digital media, digital marketing, and print and publishing. They are most well known for their creative suite, which comes under the digital media segment, and it comprises of some of the most well-used and well-known softwares in the world, such as Photoshop and Premiere Pro. In the earlier years of their business, these products and more were sold on a buy and keep forever basis. However, in 2013, they changed their creative suite to a subscription-only model. Many at the time thought this might kill Adobe's success, and that many of their customers would move to cheaper competing products. However, they were very wrong. Adobe actually maintained most of their customer base, except that their customers are now paying $50 a month instead of a one-time fee. This change drastically increased the revenue generated per customer, and this was reflected on the top and bottom lines, as well as in the stock price. The stock price between 2013 and now has risen almost 500%. And 81% of that came in just the last year. I'm very glad that Adobe changed to a subscription model because not only did it substantially increase their predictable revenue, it also proved to me that they have a strong economic moat because despite huge price increases, they were able to maintain almost all of their customer base. The strong economic moat that Adobe has is further substantiated in some of their biggest products. I love using Photoshop as an example because their branding is almost as strong as Google. Photoshop and Google are both used as verbs in English language, and that makes them really powerful brands. The reason that people say, that's Photoshopped when they're talking about pretty much any kind of image alteration is because anyone who knows anything about software knows that Photoshop is the most superior product for image editing. So how well is Adobe's management making internal investments? To analyze the efficiency of a management, I like to look at the ROIC, the return on invested capital. Adobe's 5-year average ROIC is about 9%, and their current year, or the ROIC for the last 12 months, was a whopping 19%, which is excellent. It's a really great sign to see that a management is getting more effective at producing returns on their capital over time. Now let's see if Adobe has any out of control debt obligations. If we look at the current ratio for Adobe, it's just above 2, which means that they have plenty of cash and short-term investments to cover their short-term 12-month debt obligations. And the debt to equity ratio for Adobe is 0.72, which is slightly above our target of 0.5, but it's still great to see that they have more equity in the company than debt. Now let's get to the fun stuff, the growth numbers and the valuation of Adobe. So if we're having a look at Adobe's numbers here, we can see over the long term in their 9-year average growth rates, we can see that it's between 7 and 10% consistently, which is a really good sign because it means that we can use those numbers in our valuations, and we know that it's going to be fairly accurate because it's very consistent for this business over time. Having a look at the shorter term growth numbers, we can see that they've been improving over time for almost all of the categories. Equity growth has been kind of slow, but that's because they've been investing a lot to expand. Earnings per share growth has been excellent over the past 5 years, 15% growth, which is brilliant. Free cash flow is awesome. It's great to see that a company has a lot of free cash so that they're not going to run out of cash anytime soon. And sales growth is excellent as well. 5 year being 10%, 3 year being 20%, and the 1 year being 25%. If you have a quick look at the chart, you can see that the growth numbers are growing over time, which is excellent. It means that we can use those long-term growth numbers to estimate the growth over the next 10 years, and we can be sure that they're going to be fairly accurate. So from looking at those growth numbers, we can see that they're excellent. They're very good. Long-term is between 7 and 10%, and they're all very consistent in that. It's not like we have one that's at 2% and one that's at 25%. They're all in that 7, 8, 9% range, which means that we can use and we can be comfortable using a 7, 8, 9% growth rate in our valuations, and we know that that is going to be a consistent growth rate for Adobe over the next 10 or 20 years. So let's jump in and have a look at the value matrix so that we can see what kind of returns we can expect if we're going to buy at the current price, and then if we have a bit of a discount, if we wait for a pullback, what kind of returns we could expect from that. So as you can see, at the current price of $253, the outlook looked pretty grim, and this is basically down to the fact that they have such a high PE ratio. So that PE ratio is going to have to come down over time, and when the company is growing at 5 to 10% per year instead of 40% per year as it's done in the last year, the PE ratio is going to come down substantially, which means it's going to eat into our returns. Some people might say that these growth numbers that I've picked from 8 to 16% and a PE of 15 to 40 is low. However, I like to be conservative, and I don't think this is particularly low because we're talking about growth over 10 years. And we can't expect that a company is going to be able to grow at 20% per year when they're already a multi-billion-dollar company. It's more likely that they're going to grow at the rate that they've been growing over 10 years in the past, which for Adobe has been between 7 and 10%. So for me personally, at the current price, it's just way too expensive. There are just way too many circumstances where if it grows at 8 to 10% and it has a PE of 15 to 25 in 10 years time, that we're actually going to see negative returns, which is something that I'm just not comfortable with. Because even despite all the odds, if it grows at 16% per year for 10 years, which is crazy, not many companies grow at 16% per year for 10 years, and it has a PE ratio of 40, even after that, we would only get a 10% return if we bought at the current price. So now let's have a look at what kind of price we'd need to buy it at in order to see 15+% returns across the board. Now, this may sound crazy, but I think that Adobe is worth as little as $100 per share. And this is because even if it falls short and it does 8 to 10% returns, we can still expect to get between 2 and 10%. And if it performs as we expect and it gets between 12 and 16% and it has a PE ratio of 25 or 30, we can expect to get our 10 to 20% return, which is what we require over the long term. So in conclusion, I think that Adobe is a really, really solid business. And because it's such a solid business and it has such a great business model and such great branding, it has a premium price because it's very attractive to investors right now. So this is one that I'm sticking in my watch list, and I'm going to wait until there's some kind of massive pullback in the market and prices are going to come down substantially, and then maybe I can enter in a position for Adobe. Also, just before we finish up, if you want to see a video on how to make this value matrix, chuck a like on the video so that I know you're interested in that, and I'll be sure to bring that out in the near future. So that's all for today, guys. I hope you enjoyed my analysis of Adobe Systems. I'm super excited to see what you guys think about Adobe, so make sure you leave your thoughts down in the comments below. If you're enjoying these analysis videos, make sure you hit subscribe so that I know that you want to see more of these videos. and I will bring out a ton more of these videos in the future. And if you have any specific stocks that you want me to look at, make sure you leave them down in the comments below so that I can chuck them on my list. I hope you guys have a great day, and I'll see you in the next one.